A good set of
My
results. Are you pleased with them? What more can you do?
Well, very pleased with the good momentum we start the year. I think that, first of all, we are making very good progress on our integration plans, but also it was great to see a very strong return to profitability, both on a reported basis, but also very strong underlying profits. We also see good momentum with clients, with inflows across our businesses, and our capital is strong, so allowing us to continue to pursue our capital return plans.
And also, the investment bank was actually quite strong, better than expected. Again, what does it tell you about what you can see in the future? Is it a one-off, or actually is the path ahead better?
Actually, it's a good momentum. You may remember in the fourth quarter, we also had a very strong performance in banking. As we integrate the new colleagues from Credit Suisse on our platform, we start to see the pipeline developing. We are able to execute. And so it's very much aligned with our expectations of improving the mix between our markets business and our banking business in the investment bank.
So in the investment bank, where do you see the biggest strength? I know we also heard about possible job losses in Asia. Is Asia at the moment weaker than, for example, parts in the US in investment bank?
No, I think that we reinforced our franchises globally. I think that, of course, we are still going through across the entire bank. We are still a lot of work to be done to restructure the businesses and to bring them back into even stronger profitability. So I think that is a good momentum. We achieved almost a 10% return on CET1, which is still a third or 50% away from our final target. So still work to be done. We always say that 2024 is an important year. And as we now approach the end of May, we're going to execute on our legal entity mergers, which allow us to unlock in the future further cost savings.
An important year, 2024, because it's also a more difficult year to 2023?
No, because it's a more, first of all, we have two huge milestones, the merger of our legal entities, and the second one, we start to do the migration of clients from the Credit Suisse platforms into the UBS platforms. So this is very technical, still requires a lot of support and people to do that. But as we start to do that, we can unlock some cost savings, but also unlock capital savings, funding savings, and therefore achieving our final targets to achieve 13 billion of savings by the end of 2026. For this year, we do expect half of that being achieved, so 6.5 billion.
Sergio, when you look at global wealth, I mean, the outlook talks about interest rate cuts. Again, how do you worry about things that are outside your control?
Well, things that are outside our control, you always need to wonder what can happen on the geopolitical front, what can happen on any sudden change in the macroeconomic picture. So I think that we do indeed factor in our outlook for NII, for example, 3 rate cuts in the US, 2 rate cuts in Switzerland. This can change. And if it changes, may be beneficiary to our NII, but maybe the underlying macroeconomic event is not so positive. So, we need to always assess. Well, we are prepared for any scenario. We stay focused on executing on our plan, but also we have a balance sheet for all seasons, allowing us to really manage any unexpected event.
So when you look at market volatility, it's a little bit unusual to see this much market volatility or even pricing on the Fed. How would you describe the markets?
Well, it's a kind of market volatility around bonds and the 10 years. But if I look on FX, I look at equities and many other asset classes, the volatility is not there. It's more subdued. We saw more client activity, but let's not forget that there is a little bit of seasonality factor in the first quarter. So we need to really see how in the next quarter things are going to play out. We have to remember that we are still facing in the foreseeable future big elections coming, and how this is going to then play out into the sentiment of clients is still open.
And that will be very regionally. Again, if you look at pipelines, do you see a difference?
Yeah, very regionally, but nowadays things in every region can affect others. So I think that things are quite fluid.
Is Europe weaker than the rest of the world?
Well, Europe is still not growing. If I look at our businesses, of course, it's still somehow clear that the real growth is mainly driven by the US and Asia. I'm also very pleased with our performance in Switzerland. But when I look at Europe in general, it's still not so constructive.
I mean, there are talks about possible, of course, integration or M&A of banks in Spain. I don't know whether you see yourself as kind of like the original M&A for different reasons, but are you expecting a consolidation wave?
I continue to think that it's over time is going to be is necessary to see more consolidation in the European banking. We may be seen as a playbook or a reference point going forward on how to merge two larger banks, but eventually what we see right now in Spain, at least, is a scenario in which you go through first mainly domestic consolidation, and this is a prerequisite later on maybe to expand this into a more European framework. Now, in order to do that, you need to have a banking union model. You need also some regulatory and it's not even regulatory, I would say, it's more political decisions about how Europe wants to see its financial markets and banking markets being managed. But over time, in order to stay competitive vis-a-vis non-banking financial institutions, to stay competitive vis-a-vis new entrants that are not necessarily just banks, banks do need to create economy of scale so that they can invest and stay relevant to their clients.